By far the best investment you can make is in yourself.
You don't need to be a genius. You need the right orientation.
What you need is you need a castle that has some durable competitive advantage, some castle that has a moat around it.
From his early beginnings to beating the stock market with his smart investment strategies, discover the key steps that made him one of the richest and most successful investors in the world.
By far the best investment you can make is in yourself. I mean, for example, communication skills. I tell the students that come that they're going to graduate schools and business and they're learning all these complicated formulas and all that. If they just learn to communicate better, and both in writing and in person, they increase their value at least 50%. And, I mean, if you invest in yourself, nobody can take it away from you. In capitalism, when you have a wonderful business, it's like having an economic castle. The nature of capitalism is that people want to come in and take your castle. Now, what you need is you need a castle that has some durable competitive advantage, some castle that has a moat around it.
An economic moat refers to a business's sustainable competitive advantage, something unique that keeps customers coming back despite competitors offering similar products or services. It's what protects the company's market share and profitability over the long term, creating a barrier that makes it difficult for rivals to erode its position.
He is incredibly intellectually curious and well-read, and I like how simplistic he likes to keep his thought matrix. Mm-hmm. And then also, instead of trying to outsmart the market, it seems like a simple axiom, but just look, good companies that are led by talented managers that are good businesses over time are gonna get there. So I'm not going to day trade. I'm looking for value. And then just on his ability to take in and then use information, it was incredibly impressive.
You don't need to be a genius in what I do. You need the right orientation. 90% of the people, I'm pulling a figure out of the air, but 90% of the people that buy stocks don't think of them the right way. They think about something that they hope goes up next week.
First I met Warren, we were talking about getting together and doing something again, and he pulled out his calendar, and the pages were so blank. And I said, wow, you've managed to avoid getting tied into a lot of kind of meaningless activity. And Warren said, yeah, you have to be good at saying no, and picking the things that really make a difference.
I just read and read and read. I probably read 5 to 6 hours a day. I don't read as fast now as when I was younger, but I read 5 daily newspapers. I read a fair number of magazines. I read 10Ks. I read annual reports, and I read a lot of other things.
Well, there's a big correlation between success in life and an early start. And Warren had a passion for doing well competitively and getting money as a little tiny child. And he just kept it. And now you add a very high IQ and a lot of energy, and he got a flying start. Well, he was an old Graneman Newman follower, and he'd made a lot of money buying thinly traded securities that were incredibly cheap statistically. And with small amounts of money, which is what he's working with, he could find enough of those to earn pretty high returns on capital year after year after year. Now, occasionally, the market would give him a big security to buy instead of an obscure. And the first one I remember of that kind was American Express, when the salad oil swindle pretty well clobbered that stock for a while. Warren went around, did a lot of research, and decided that it was a minor blip. The market was wrong and he was right. So he bought a big A-rated security and made a lot of money. But mostly he was buying more obscure securities that were incredibly cheap.
I advise you to seek out, as your partner in business, your partner in life, whatever it may be, look for the people that actually are examples to you. The cigar butt approach to buying stocks is that you walk down the street
and you're looking around for cigar butts, and you find this, honestly, this terrible looking, soggy, ugly looking cigar, one puff left in it. But you pick it up and you get your one puff. Disgusting, you throw it away, but it's free. I mean, it's cheap. And then you look around for another soggy, one puff cigarette. Well, that's what I did for years. It's a mistake. It's so much easier just to buy wonderful businesses. So now I would rather buy a wonderful business at a fair price than a fair business at a wonderful price. But in those days, I was buying cheap stocks, and that money did not compound. You really want to be in a wonderful business because the time is the friend of the wonderful business. You keep compounding, it keeps doing more business, and you keep making more money. Time is the enemy of the lousy business. I could have sold Berkshire, perhaps liquidated it, and made a quick little profit, one puff. But staying with those kind of businesses is a big mistake. So you might say I learned something out of that mistake. And what I did with Berkshire is I kept buying better businesses. I started the insurance business, See's Candy, the Buffalo, all kinds of things. I would have been way better doing that with a brand new little entity that I'd set up rather than using Berkshire as the platform. Now I've had a lot of fun out of it. I mean, everything in life seems to turn out for the better.
There's one thing that I should mention that really is terribly interesting about Charlie. Charlie knew the importance of psychology and human behavior and incentives and all of that. He figured that out very early. And of course, he gave some talks even on, 25 or so ways, whatever it happened to be. I don't remember the exact number, but the different ways that one person could take advantage of another by understanding how humans behave. And then, after doing a magnificent job of explaining it, he believed in understanding what others would do, but he thought it was beneath him and to actually use those methods to manipulate people. It's a really interesting human being that thinks through the psychology of human behavior and figures out, how you become a great insurance salesman or manager on Wall Street or accumulative assets under management or whatever it may be. And you get very rich by understanding the weaknesses of others to some extent, and then decide that it's very important for you to recognize these when they occur. It's very important for you to know them better than the person that actually is using them, but you don't have to stoop to using them yourself.